Is it safe to say that a run on the metal is happening now?
Yeah, yes, it is.
Hello there, my friends. Chris Marcus here with you for Arcadia Economics. And tonight, part two of the call with Andrew Maguire. If you thought what he said yesterday was pretty wild, especially in the midst of these historic rallies, then you're in for a treat tonight. And without further ado, here we go.
The Bank of England and the Treasury are gearing up for a physical upside revaluation. They're not stupid. Of course, they know it's coming. It has to happen. So this vampire squid's tentacles, they're deeply embedded inside the BIS. And we see officials readying to square up the books with a revalued gold price. Has to happen. Either way, whatever way you look at it, gold and silver require significantly higher prices to square the books. So don't listen to any of these crap calls out of these idiots who are trying to get people to puke up positions so they can actually buy more themselves. I mean, so, people say, well, then, what about, how are they going to square these books then? Because they're still acting as an agent. They're still trying to slow the ascent of gold and silver. Gold, pretty much. I mean, silver, I think that's kind of losing its lid. But,
well, Andrew, losing it as we speak. I mean, it's almost maybe the Goldman's tapping the line, listening to what you're saying. Silver up almost another quarter since we started the call. And look at the gold price. I'm sure the futures contract already well over 2,000, which is probably a lot more realistic. But look, on the Kitco chart, I've been wondering if when it crosses 2,000, I mean, when I think about the way these markets are set up, I mean, look what happened when it finally broke through 1980, where we saw it reach a couple times last week and then get spoofed lower. And now you see it finally breaks through 1980, skyrockets. And I do want to come back to, you mentioned a couple times, an eventual reset or revaluation. Actually was kicking myself a little bit because you mentioned that last month, and I wanted to dig into that a bit more. Although perhaps just to set that up, again, you talked earlier about how right now you can't get bars on a wholesale level in silver.
Mm-hmm.
And really throughout the last decade, there were a lot of people saying gold, silver, watch out. First of all, while silver has yet to get back to $50, anyone who's been saying one day in the gold market, they're going to keep printing. I mean, we're not one day anymore. It's here. So first of all, to everyone who's been talking about gold, I mean, hopefully, if someone gives you crap about it, be like, did you check the price lately? Did you look at what's happening? But going back to what you said about not being able to get bars, it always seemed like it was a scam that, you can fractionalize the metals, but one day when people show up looking for their metal and they can't get it, and you're saying you can't get it, we're seeing a run on the COMEX. I will pull up here we've seen, it's like each delivery cycle sets a new record. Now here are the gold deliveries, already up to almost 40,000 contracts, another 5,000 posted for delivery last night. And of course, it is special that Goldman and JP Morgan are showing up as some of the ones taking delivery, but it seems like all these things are fitting together. And I mean, unless these numbers are completely fraudulent, which let's not rule that out, but I mean, is it safe to say that a run on the metal is happening now?
Yeah, yes, it is. I think what we need to do is see spot silver, the spot silver price get above 2,000. Now, obviously, the futures price, been through it multiple times. I think the first thing is what we need to look for is a pit close with gold futures. December futures are fine, above 2,000, a pit close, which it hasn't happened yet. That is going to really get the attention of the shorts. And then what's going to see, we're going to then see the spot price start to overtake 2000. The minute the spot price overtakes 2000, that'll become support. Then where's the next level? I mean, the next level is right at Goldman's target. You know, really, as we say, we see the trigger for the evaluation just above that at 2500 spot and 32 silver. And it's not just me. This is the aggregated view of a lot of wholesalers who say, well, yeah, we've got X amount of liquidity, but at that point there, no one's going to sell anything. So really, this is the revaluation where they have to step in at this point, because it'll become too obvious. Plus, you need to square these positions, as we know, and there's no argument there. Everyone knows, with all the money printing, with all the revaluation depreciation of currencies, with yield curve control, etc., etc., etc. A million reasons you gotta reset the gold and silver price. Now, from all we can assess through our close ties to the wholesale market, at these price points, all the insiders will be positioned and ready for this upside revaluation. And the footprints evidence what the first tier banks are doing. And we see these bullish drivers already in play. And the only solution to reset the gold price would be through an unallocated gold and silver market reset. Unallocated gold contracts can be squared at a price point by way of a weekend cash settlement. And bear in mind, we know there's a lot of unallocated contracts. So you could square all of those. Nobody would be able to complain about that, because whether you're a pension fund, who we've been talking to in the past, who still refuse to unwind their unallocated positions, and I think the fiduciary responsibility for their customers and their clients and their book is grossly misplaced, but they will square for cash. So all these many years of hedging and having that allocation to gold and silver just be squared up, and they'll miss exactly what the point of holding those positions was for. So yeah, you can have those, but really it's going to be done in the FX markets. You cannot default on an FX contract, as you know. So whether it's dollar gold or euro gold, you can't default on a cross, whether it's, and of course you've got gold and silver as a currency cross. So you can't, one's short, one's long. You can't default on it. And the resulting price is, of course, the fixed price. And we saw another fixed price today that tells me, God, these guys better get out. And they better get out in a hurry, because no amount of siren calls from the likes of the banks who are still trying to slow this ascent down is going to slow it down. It becomes so obvious now. I mean, the trouble being encountered by insiders trying to unwind paper shorts is the tiny amount of supply of physical gold and silver, which we're just talking about. So you're caught between a rock and a hard place, especially silver. So you've got this dwindling residual real open interest, because the second tier banks have all bailed, they're all hurt, they're still suffering a lot of pain. And they're, so really what that does is expose this enormous rehypothecated bullion to such a degree, it's now attracting the sharks who smell blood. Now, these guys don't care about gold or silver. They'll come in on any kind of short sell rinse, and they are professionals. They'll do it. They smell it. Why wouldn't they be coming in now? 2,500 is when they will come in. That will be the point where you suddenly see silver. And I hate making price predictions, but of course silver. How can silver not be over its 2011 highs of $50? How is that possible? It's not possible. Gold is already it's been revalued. You're going to see again. It's that fake trade, isn't it? It's that spread trade. It's like these people that look at a screen and say, "Well, yeah, we'll just short silver and we'll buy gold." Yeah, hang on a minute, but there isn't anything there for you to short. So, yeah, okay, you can drive it up to 150 to 1, or you can really let it go back to its natural level, probably about 15 or 16 to 1. So we figure probably 62 it stops for a minute, gets down to 32, then eventually it gets back to its real level. So we're going to see a religious experience here for the shorts. It's going to move so much faster. And when it gets to 30, it'll be at 50, because it's just a gap. It's a shark gap, and these sharks smell it. So watch out if you're short, and you're going to get rinsed. And unless you're unless you've got somebody to bail you out, like the Fed, you'll have nothing left in your margin account. In fact, you'll owe your house.
Yep. And Andrew, a fun one, actually a couple of great points you mentioned there, because I want to get back to, we saw something quite stunning on last week's COT report, where it shows, perhaps for the first time, that shorts were buying out of their position. So I'd like to get your comment on that. Although first, a quick one, because you just touched on it and I have it pulled up here. You probably know the answer, but I'll ask you anyway. Back in 1980, silver hit $50. Do you know how much time elapsed from when, here we have December 24th, 1979. So on the way up, when silver hit $24, you know how long it took between $24 and $50 in 1980?
Tell me.
So there you have December 24th, 79 crosses 24.60.
Yeah.
Then we see hits $50 or close at $49.45 less than a month later. So I've heard a lot of people saying, well, the silver price has gone up too fast, it's going to correct, which it may well, but just we're talking about a sample size of 2 to begin with. So I don't know that it has to go, but even if you compare it at the 1980 rate, it'd be nice. We'd be talking about $50 silver by Silverfest on September 12th and 13th, which I sure am hoping you will be joining us for. Would really just to celebrate all these exciting things and the people and the speakers like yourself and the companies that go and find a way that we can still have silver, even though a bunch of banks are manipulating the price. So certainly, I've felt, especially after what we saw the last 2 weeks, where, again, I'm not saying silver is going to be $50 next week, but in my opinion, I think we've entered the stage where it's possible to see things that most people think are impossible now, because you're seeing a run on the metals, as we discussed. And again, if you'd like to comment, where now we're seeing, for the last 10 years, it was like, well, when people show up for their metal, okay, check. Or if the shorts finally freak out and say, geez, this doesn't seem like gold's about to cross 2,000, maybe not the best time to be short silver. And again, the last COT report bearing that out, showing evidence that that's exactly what's happening.
Yeah, and I think what's interesting is again, I listen to a lot of things going on, and so we see an unprecedented amount of deliveries going on. And in fact, when we were looking at the August contract that just expired, that was trading at an 8-cent backwardation to spot, and that's interesting. And then we see suddenly this huge amount of deliveries occur. Now, as a wholesaler, I'll tell you, it cost me 30 cents an ounce to fly gold out of America into Switzerland or the UK. Switzerland is where it would go. So you've already got a backwardated situation into a contract which has been trading in massive contango. So there's that's going on. But also, I haven't seen anyone mention this, but also what we're seeing is, and I think it's fairly contained, but when you see deliveries going on in the market, in the COMEX, what you're also seeing is some of these guys, it's almost as if they've shut the doors and they don't want to know what's going on anywhere else. We've always made money on the COMEX. Let's just shut the doors and if of this casino and ignore anything else going on. But so what they're doing to some degree is taking a 20 cent, $17 today, but anyway, $20. They're taking the $20 premium for December taking physical delivery in a backwardated contract in on the COMEX and selling it short in December, right? So as the only way of making some money. It's a huge risk. That's a massive risk. That is assuming the price doesn't go through the roof, because now what you've done is taken a physical. Is it physical? Here's the point. Are we talking about a real physical bar? Or are we talking about a rehypothecated bar? Is it a warrant on a bar? How many warrants are on that bar? Okay, so now you've just taken, say, 6,000 contracts, delivery, and you've sold them off into December. Okay, so now you've got $20 profit. But yeah, okay, so technically you're hedged physical against the contract. Why would you do that if you knew, and certainly Goldman would know, and certainly a lot of these insider banks would know, that a reset is coming? Why would they do that if they knew that gold was going to be way in excess of $2,500? Why would you pick a poison point of last week or today even? Why would you take a poison point and just say, okay, well, I'll just sell it forward today at this price, the $20 premium that there is? Why would you do that? It makes no sense. If you're in the know, you wouldn't do that. You may get some arbitrageurs thinking, oh, well, you know, I'll just do that because it'll work. No, it won't. It won't work necessarily, because that only would work if you could keep the lid on the price. So that's not happening. And so I really think what the bulk of it is actually physical. Anything that is coming out in physical is diluting this rehypothecation. I think that that anybody that I think it's much less this selling short, rolling a contract forward, or shorting, running it forward actually is very expensive. But taking physical delivery of one and selling short the other is, to me, makes no sense in a bull market that's rallying so strongly. So there's my take on that, because I haven't heard it mentioned that that they could be trying to sell this stuff forward.
Yeah, and Andrew, as I think you just saw there, fortunately, I mean, this couldn't be working out better. And not to get all too sentimental here, although as I think about my own journeys in the past decade, and then all the things I've done and that you've done, to be sitting here to actually see on a Kitco chart. I mean, again, we know the futures are higher, but okay, down 20 cents, but it's quite an honor and a pleasure to be talking with you and recording this interview as we now see a $2,000 gold price on the Kitco chart. So really a historic day. And I think vindication, and maybe vindication isn't the right word, you know, it's not the point to say like, I told you so, but just, you know, for people like Gata and Bill Murphy and Ted Butler and yourself, who have been saying this for a long time, it's here now. I'm wondering if now we're right at that $2,000 mark. My guess is we're either going to see a big move up or a big move down in the next couple of hours. Although a few last ones before. Do you have a comment there?
Yeah, I was going to say, okay. Yeah, round numbers. Yeah, you see, because there's always a few paper guys that want, oh, let's take some profits. It's a round number. Let's take some profits. So, but the thing is, and I look at silver because silver is really where it's so visible. It's so easy. We knew all day today, and we knew all day yesterday, and we knew that any dip was going to be jumped on, because the layers of orders that are unfilled under the market, in the spot market, no one dares get into them, because you tag those and then you are technically on the hook to deliver. You already can't deliver. It's impossible to deliver what you're now taking the long side of. So the short side of. So it's not possible that they would be daring to actually delve into those levels. So we know there's massive support. So silver, in my view, and how can gold go down when silver continues to go up? And I think, yeah, we'll see a little messing around at 2,000. But as I say, once 2,000 spot holds, it will go into backwardation. it will start to move. It's already going to move. I think already, if we look at it after today, it's probably in technical backwardation, but it'll move into backwardation. And then we're going to see the whole thing. We're going to see another March 23rd. And I think so, again, I think who would be short this market? And I think, as you say, it's an honor. It's been many years. It's an honor to see, to be talking, as you say, when we see this, it's going to come back. There's going to be a bit of toing and froing. It's a thin market to get through. What I think was probably going to happen, I mean, if I really had to be asked the question, where do we think we'll be? I think we wait till non-farm payrolls is over. Then I think wait to the middle of August when everyone thinks the market's gone to sleep. Then I think it's going to take no prisoners. I think it's going to go. And if anything, it'll reach Goldman's target. Now there may be we're talking about that reset may be coming a little bit too quick, and maybe we may see some defense at those levels. But once it gets to 2,500, it'll be time. You need to have physical at that point. You need to be sure you've got physical.
Yeah, and it's interesting. You just mentioned the non-farm payrolls. It reminds me of another thing I had pulled up here. This is thanks to GATA, who leaves it on their website. The incredible exchange between you and the CFTC, Elliot Ramirez. I see Bart Chilton was copied on that as well. Back in February of 2010. And I was looking at this again last week because basically you told the CFTC, hey, the market's rigged. Everybody who's on the floor knows it. And you laid out how things will play out on an unemployment number. Scenario one, if the news is bad and bullish for gold and silver, that the precious metals will draw bids, spiking them higher, and then it will get crushed. Which is exactly what played out. I wish Kitco's daily charts are down, but I mean, you saw that happen during last week's Fed meeting. It was incredible. It was just exactly what you described, where it goes up. It doesn't go straight down, but they got people on board and then just hammered the heck out of it. While I don't have the chart of that, we saw the same thing on on Sunday night during the open in silver and gold, where on the blue line you see it spikes up about 45 cents and then gets driven down. That was one of the things Bart Chilton confirmed as well, where I asked him if my interpretation that, if it's around $20.03, you sell a little bit, you nudge it, you get the stops, the algo's in there, and then it drops back, they buy it lower. I love the way he answered. He's like, well, that's a good description. Actually, that's a really good description. Then he talks about spoofing for 2 minutes and says the only difference between your description and what happens now is that the way the markets are set up, when that happens, the moves are even bigger. Is that what we've been seeing play out over and over again these last, not just weeks, but years?
Yeah, and I think when you think about what frustrates me is that we actually provided this, as you talk about this evidence here, that was one example, but there were 88 examples where we said, this is where gold will be the next day at this price at the fix, where silver will be at this price at the fix. And that anyone in the meantime can sell it with impunity because they know that you can buy it back at this price. So 88 examples of it. And as you say, so that was the frustration of this whole event, this whole situation was these too big to fail banks, taxpayer funded banks. We walked out of the DOJ. Well, it's pretty clear that nothing was going to happen. And so we always knew that one day, Chris, this paper market would overrun the physical market would overrun these paper guys. It was inevitable one day. But I think we knew that it would happen, but we were kind of hoping it would happen quicker than now. But as you say, I'm one of the reasons, and I said we would talk about it as well. One of the reasons I became involved with Kinesis was because of walking out of the DOJ one day and it was April 2011. I'll never forget it. Came back to London. No coincidence. I don't believe in coincidences. I met Tom Coughlin, the creator of the allocated bullion exchange, that exact same week. I was bummed out. I was thinking, nothing's ever going to change here. Look, I'm knocking on 70. I don't want another 10, 20, 30 years to just be resolved, you know. So, you know, I was very, very keen. But basically, I don't believe, as I said, I don't believe in coincidence. To cut a long story short, over the next 10 years, the allocated bullion exchange that Tom created, we got all the necessary institutional grade electronic. We created this electronic physical exchange to support the end goal, which was always going to be provide everybody, every single one of us, access to gold and silver as real money. Knowing that, and that's where the Kinesis journey began. And I'm just proud to be associated with it, because essentially what we're doing here is we're ending the paper sham and accelerating that process just that little bit more. And I think, to me, that's why I'm so happy about you know, this all coming together today. We're looking together, we see the price, we see the gold moving onto the blockchain, we see there's the social side of this too, Chris. The social side of this is important to me because, you know, look, can you see this?
Yep,
can you see this? Okay, that's maybe 3.5 ounces. I know where this came from, and I know it was ethically mined. But unless you put, and there's two things that go on here. If you can put this right from source, where you know, on the blockchain, through to a refiner, through to the end user, and we know, and it's vaulted, we know that this is ethically sourced. It's not blood gold. And we had some issues last week with Perth Mint, or we didn't have issues, but Perth Mint had some issues where they were, well, I just read it on Reuters, and I personally haven't spoken to anyone at Perth Mint, but I saw it on Reuters, saw it on Bloomberg, that they were being potentially delisted from the LBMA for accepting artisanal gold, which had no KYC on it. Yeah. I'm dead against that. That really upsets me to think that could even be going on at this time, when LBMA is supposed to, you know, obviously the LBMA accreditation ensures that every gram of gold that enters that system is ethically sourced. But the other side of this is if you can put this stuff on the blockchain and it's ethical, and we all know it's going to attract more people into it, because a lot of people are put off thinking, well, how do I know where it's come from? Much like a diamond. But here's the other thing, is that you don't need any fixes anymore, because if this is trading on the blockchain and it is adopted by most liquidity providers I speak to, say, well, you know what? Of course, you know, we don't want a fixed price. We want a 24-hour price. We want it based on supply demand. So basically, it will eliminate the need to have a single point fix for silver and two fixes during the trading day on a regular trading day. And we've just been through one a little while ago, and we saw gold go up on that. But I mean, why should we wait for one fixed point to set all the derivative prices? Is why, when really you don't need the LBMA, you don't need a fix, you just need gold trading on the blockchain in ethical fashion. And I think that's one of the reasons I am, and that's why I'm so passionate about Kinesis providing this solution, because I know we are first to provide this solution where we can actually track it from the ground through all the way to, and then monetize it. So you can actually spend this, earn a yield, and know that you're doing something that is ethical and correct. So to me, that's pretty much sums it up.
Yeah, and Andrew, for folks who would like to get involved in Kinesis, could you just let them know how they would do that, where they can get more information, and how they can get started if they're interested in that?
Yeah, and if you go to kinesis.money and well, open up the app, have a look, and it's got some tight spreads. There we are. Thank you. I think the other interesting thing, we've just moved into the minting phase, so you can become your own central bank. You can be a market maker, not a market taker. And really, why should anybody have an advantage over someone else? It's a shared system. It's transparent. It's fair. Everyone can see who is making what. It's just a share of the entire ecosystem. Unlike when you spend your pound or your dollar or your euro, where it's gone down. It's just gone. And you've just really, what you've done is support a broken banking system and enabled these guys to keep making it worse. So this is your solution. And I honestly think that you should really consider at least looking at this. And as I say, minting, have a look at what minting does. Minting is the ability for you to create your own currency and to bring it to life.
Yeah, well, I appreciate that. And for anyone who's interested, the link is in the description field below, right down there. Andrew, perhaps to wrap up, something I know a lot of people, a lot of silver junkies like myself are already wondering, is the silver September delivery cycle, you think that's going to be the knockout blow on this?
The delivery cycle on the COMEX?
Yeah.
There isn't any, is my answer. There isn't any. If we as a wholesaler can't get it, how can anyone else get it? I mean, I'm sorry, but there's no other answer. If we've got to wait till January, February, March to get just a ton here and a ton there, when there's 2,000 tons apparently as over the last 4 weeks accrued in the SLV, it's not possible. And as I say, reverting back to, if I can't even get a bar list for something I'm buying today and I won't get till January, why? It's not being refined. So it's not there. It cannot be there. Yep. So, delivery. What is the delivery? What do you think? I'd ask your opinion because you're a silver guy. Tell me what you think.
I mean, there's that one part of me that says, don't ever underestimate the ability to see the price smash just when you think. It's kind of like that. I don't know if you guys watch much baseball over there in London, but that old movie Field of Dreams where guy says, look for the curveball low and away, but watch out for the fastball in your ear. I mean, I think it's good. I expect they'll raise margin requirements. They'll do things that we can't think of to try and keep it contained. But yeah, when I add up everything that you and I have talked about, the other guests that I have on here, my own research, and just looking at it, I mean, I wouldn't be as bold as to guarantee $50 silver by the time that hits, but gee, when you think about what could facilitate that, sure seems possible. And darn, are we going to have to wait? It's all another month until the first Tuesday of September to have you back on. Andrew, I can't thank you enough. What a fun call on this historic day.
It is a historic day.
I can't wait to see what happens 10 minutes from now, tomorrow, next week. And folks, again, you can find out more. Andrew's on Twitter. You can find out more about Kinesis. And for anyone, especially new to Kinesis and has heard the concerns about SLV and GLD, and you're wondering, is this something that's safer? Fortunately, last month, Andrew dug into that. And for an explanation, that video is coming your way now.